Hey folks, welcome to today's show report where we discuss everything Ontario real estate related. I wanted to dive deep into the topic that affects our economy and our wallets that's very important, and it's inflation. And also the Bank of Canada's upcoming interest rate announcement and monetary policy report that's coming up on July 12th. Let's break this down into simple terms. Inflation rates dropped to 3.4% in May, the lowest they've been since June 2021, and it's down from April numbers, which were up 4.4% from the previous year, meaning that the annual inflation rate has come down by about 1% year over year from April to May. Still up, but not as much as in April. So what does that mean? Well, inflation is all about how prices change over time, and when prices go up, it's called inflation. The Bank of Canada is responsible for keeping our economy stable, and they use interest rates to control inflation. If prices rise too quickly, then they might raise interest rates to slow things down, as we've seen over the course of the last 18 months or 16 months. But if prices are rising too fast, they might keep interest rates the same or even lower them. Now, the Bank of Canada has an important decision coming up on July 12th. They'll be looking at all the data and deciding whether to raise interest rates yet again or keep them the same. It's like adjusting the engine of our economy, and there's a lot of varying insights and opinions surrounding this topic and what decision they're going to be making on July 12th. Inflation affects our daily lives. Some things get more expensive while others become more affordable. For example, the cost of mortgages has gone up, making it more expensive to buy a house, but prices for cell phone service and furniture have actually gone down. So different things impact the inflation differently, but one of the most important parts is food prices, and they've gone up quite a bit in the past couple of years, and recently grocery prices have been on the rise, especially for items like bakery goods and cereals. But there's also other factors like delayed growing seasons that mean fresh vegetables might be more expensive this year. So a lot of different factors, but the question is, what will the Bank of Canada do? They'll be taking a look at the numbers and economic reports to make their decision, obviously. They want to make sure that inflation stays under control and the prices don't rise too quickly. Inflation is such a tricky thing. It takes time for the effects to show up in the economy, so the Bank of Canada will be watching closely to see if inflation keeps going down or if it starts to go back up again. Considering the recent news of a 1% decrease in inflation year over year, it'd be assumed that the Bank of Canada would halt the interest rate increases for now and continue to monitor the market month over month, especially considering the considerable discomfort they've already caused many Canadians after 9 interest rate hikes over the course of the last 12-16 months. The ultimate question on the mind of many homeowners and real estate investors is, does the Bank of Canada really need to raise interest rates again? And it's a hard question to ask because the Bank of Canada has a target inflation rate of 2%. And some economists believe that the bank is determined to reach that target, even if it means raising interest rates again in July. However, the recent data which shows that Canada's inflation rate dropped to 3.4% in May means we're moving closer to the target. In fact, Canada's inflation rate is lower than most G7 nations like the UK, Italy, Germany, France, and the US. Economists have different opinions on whether the Bank of Canada should raise rates in July. Some argue that there's lag time to see how previous rate hikes have impacted the economy. They believe we haven't seen the full effect yet, and I agree with that sentiment. While Canada's inflation is lower than many European countries, it's still considered high for the Bank of Canada. So we're making progress from last year's 8.1% inflation, but there's still work to be done. It's unclear what will happen. Our forecast is that the Bank of Canada will put forth another interest rate increase in 2022 and 2023, whether it's in July 12th or later in the year is still to be determined. Moving forward past 2023, the Bank of Canada is expected to lower rates by about 2% over 2024 and an additional 1% over 2025, perhaps. We'll see what happens in the weeks and months to come, but make sure to stay tuned with our weekly newsletter here at Shoreview Real Estate Team, powered by New Street. My name is Robert Yanderchak. Thank you for joining me today. I hope this was insightful. Remember, inflation affects the prices we pay and the overall health of our economy. So although interest rates are on the rise, it's a balancing act. Lots of changes, lots of opportunities. Stay informed and message me and the Shoreview Real Estate Team with any real estate related questions. Thank you.